Hello. Good morning, a very good morning, afternoon, evening, depending on where you're joining us from. Welcome to Tech Mahindra Insights webinar on unlocking the next of insurance. I'm Arushi Arya from Tech Mahindra, and I'll be the host for the webinar today. For today's discussion, we have 3 panels covering a range of topics on the theme of innovation in the insurance ecosystem and fostering successful partnerships between insurers and Insuretechs. Panel 1 discussion will revolve around the macroeconomic conditions and challenges ahead of the insurance industry. Panel 2 discussion is on doing better with less. That is, Insuretechs are moving the needle and continuing making an impact in the industry. And finally, panel 3 will discuss connecting the insurance ecosystem, realizing the synergies between insurers and Insuretechs. Each discussion will be about for 30 to 35 minutes, followed by a question and answer round for about 5 to 10 minutes. I'm personally stoked to hear today's distinguished speakers talk about their experience and point of view on insurance industry as a whole, and understanding how insurers and Insuretechs can collaborate for maximum value. The partnership, I wonder, is like that of Batman and Robin in insurance, working together and trying to solve some of the contemporary problems for the consumers and bringing innovation across the insurance value chain. Before we begin, I want to encourage everyone listening in to take maximum advantage of the Q&A feature and ask questions from our panelists. And let's make this as an engaging discussion. Without much further ado, I'd like to invite Dror Katzav, Senior Vice President and Head of Insurance North America. He'll set the context and for the webinar and share his views on the insurance industry. Over to you, Rohit.
Well, thank you very much, Arushi. Just let me know if you can hear me well.
Absolutely well.
Perfect. So thank you, Arushi, again for setting the context and the agenda. Hello all, I'm Rohit Puranik. I lead the insurance portfolio for North America market. On behalf of Tech Mahindra, I would like to welcome you all to this webinar, and what I'm hoping for is to be one of the most intellectually stimulating sessions on insurance in 2023. I couldn't have asked for a better panel, and thank you all for joining this panel. Thanks to all our audience who are on the call. Now, we have called this Insights, Unlocking the Next of Insurance. Insights has insurance, intelligence, information, intel, insight. But what Insights does not have is risk. Now, some of you may say insurance is risk averse, and by nature, but innovation cannot exist without some risk of failure. So let me start with an example here. Innovation is nothing new for us. We have been innovating with risk since ages. In 1969, you all may know that we were able to send someone to the moon. That was a lot of risk and innovation. But then we sent a space shuttle to a lower orbit. It was less innovation and less risk. Since then, it has been a downward trend because we are trying to innovate to risk of failure. What that means is we have a lot of information, we have a lot of data, and that makes us risk averse. So to me, it's like we were innovating better in the previous ages, not now, because we were not aware of the risk. Now, what we all know is technology does not improve by itself. And again, quoting Elon Musk here, it in fact degrades by itself. So failure and innovation are inseparable twins. It only improves when a lot of people like on this call, come together, work very hard to make it better. And the reason why we are here in this webinar for that purpose. We all know the network is more powerful than any node. The wisdom of this crowd is really, really very powerful. And I'm looking forward to what we're going to hear in the panel discussions. One more point I want to make is we often hear the word digital and transformation. To me, these are the two most misused terms in insurance in terms of tech advancement. Let me throw some color what I mean by that. When these two words are combined, they create a misconception that the industry is advancing at a normal or desired pace. However, when we have spoken to our client executives, advisors, industry experts, the observation is the industry is spending a good amount or considerable amount of investment only on focusing on optimizing and scaling existing products, processes, and business models. To me, there isn't much real innovation happening. Now, Insuretechs and technology partners play a key role in this transformation as they continue to redefine business outcomes across the value chain. We all know the challenge has never been the technology, it is how we deliver the technology. Because consumer expectations for all of us have evolved much quicker than how our insurance carriers or systems have evolved. Now, collectively, we need to continue to break down this process. And I firmly believe partnering with Insuretechs is a part of sorting this out. I'm personally excited about the advancements in AI, especially generative AI, ChatGPT, Metaverse, and what it has to offer for consumers and insurance carriers, be it better customer experience, it could be improved claims, underwriting, etc. Now, let me talk about how we at Tech Mahindra are contributing to this cause. We have a very well-written playbook to ensure digital transformation. We have an initiative called DeFi, which acronym for Digital Engineering for Insurance and Insuretechs. It's an end-to-end digital product and platform engineering capability designed for Insuretechs and insurers. The DeFi allows Insuretechs and insurers to focus on their core strengths while delivering innovation with agility, speed, and a proven execution model. It also enables Insuretechs to rapidly scale execution, where they can leverage deep product engineering expertise from Tech Mahindra. And the Insuretechs can go beyond the minimal viable product offering. On the insurance carrier side, DeFi empowers them to accelerate innovation and embed new ways of working with Scots, bringing deep expertise in re-engineering their core products, platforms, and the entire ecosystem. So that's how we are doing it. Lastly, I just want to highlight that we are walking the talk in our Insurtech journey as well. Today, you will hear from two of our Insurtech investments, Surance and Swifter, and they will talk more about how they're seeing the journey along with Tech Mahindra. In closing, I would like to say insurance is like a marriage. You pay, and you never get anything back. And the purpose is, how do we make it more rewarding for everybody? Carriers who have embraced this reality and who are able to capitalize on the opportunities will deliver growth, improved experience for their customers. Thank you, everybody, and hope you enjoy and learn from the panels in the next 2 hours. Back to you, Arishu.
Thanks a lot, Rohit, for setting the context. And I absolutely agree what you mentioned about innovation and risk. There's so many different examples, all over, not just in insurance, but in general as well. And yes, it's important to partner with Insurtechs and insurance to bring in the innovation, and may I say disruption as well in the industry. To take this conversation further and set more context about what is happening in insurance industry overall, let's start off with our first panel. The topic for that panel is macroeconomic challenges and opportunities ahead of the insurance industry. The panelists for these discussion are Paul Tyler, Chief Marketing Officer, Nassau Financial Group, David Shaw, co-founder and CEO of Pen River, our very own Manish Choudhary, Global Business Head Insurance at Tech Mahindra. And to enable this discussion, we have Lisa Wardlow, President and founder of 360-Degree Immersion as the moderator. I'll pass the baton to Lisa now to take this further.
Thank you so much. Thank you all for having us. Excited to get into this panel discussion today with my panelists, Paul, David, and Manish. And let's just frame this up, right? What a lovely kickoff we just heard from Rohit, and couldn't agree with you more, Rohit. We didn't plan this, but the misuse of the word digital transformation. And I'm a Peter Thiel girl, so honestly, anybody talks about automating the process, I'm like, if you don't know Peter Thiel, you of course probably do in vernacular, but like, we're going from 1 to N, not 0 to 1. Where is the 0 to 1? And what a perfect segue as we talk about the macroeconomic changes and opportunities in insurance. So let's kick this off with our panelists today. Let's set the background. Clearly, insurance has been around for a while. We are not novice or naive when it comes to surviving and thriving throughout various multiple economic scenarios. We've been around the block a time or two, as we would like to say. And so I think we have, on one hand, a very different lineage than some of our other younger, less tried and true industries. We also are very heavy and latent with legacy experience and existing infrastructures and all these things that we're going to talk about today. So I think while we're in the midst of this current macroeconomic environment, which I want each of our panelists to reflect on what they think their top, trends that they're facing with their customers, with their clients, and with their own business models, right? Here we are, 2023. We've just survived, the clearly the largest pandemic any of us have ever lived through with respect to COVID-19. We have higher frequency and severity due to natural catastrophes, and I'll add extreme weather events. We have an incredibly sensitive interest rate environment, not to mention the overarching technology just explosion with chat GPT. I mean, it wouldn't be a webinar if we didn't mention chat GPT a few times here and there. I saw this funny thing last night, AI, with an all-time high of customer expectations. So with that mouthful, the reason why I dedicate myself to continuing to kind of find this pivotal intersection between insurance, insurtech, and optimization in the macroeconomic trends is because I believe that we've never seen a better opportunity to apply the art of thinking, not knowing. So how do we, as industry veterans and as people who have spent our lives understanding how all this works, how do we really apply that cognitive thought to creating really new? Let's get into that, like 0 to 1. How do we really disrupt in a way that aids consumers with new product innovation, with new design, and with really net new to the marketplace? Of course, backed by the original, which is insurance was the OG of making an intangible promise, an entire industry. So with that, I would love to turn it over to our 3 amazing all-star panelists that I just love being able to have discussions with. And Paul, you're on my left, according to my screen. So I'm going to start with you, and then we're going to move over to Manish and then David to kick us off. Would love to know your reflection on what's going on in the industry, and just a little bit maybe to orient the industry. I know you were introduced with being with Nassau, but maybe you could just orient everyone to what you work on and what you're seeing as trends in your area.
Yeah, sure. And I think, David and my commentary will probably overlap a little bit. David, it'll be interesting to get your perspective as well. We primarily in the retirement market. So our average customer is age 68. We are not selling to the products to the millennials. We're selling annuities, which really are retirement savings plans, income generation plans for seniors, and also we just got into the Medicare supplement insurance business a couple of years ago. So very tied together. The largest expense most people have in retirement is their healthcare. You don't think about it. People think I'm going to retire, take Social Security, Medicare is free. No, it's for a couple. Healthcare in retirement's maybe a $12,000 expense. How are you going to pay for that? One way is take some of your money out of a 401k, put it in an annuity, turn it into a monthly check that pays some of the bills. Lisa, most people aren't, buying boats with these plans. Most are paying the bills.
Yeah.
And one of the first bills is healthcare. So, health and wealth are intricately, tied together. I think from the macroeconomic perspective, a couple factors, are top of our mind. Interest rates, higher interest rates allow us to give more to the consumer, but anything that changes too fast, up or down, is necessarily good for the business. We can, David may want to add a little bit more. I think inflation is enormous challenge we're all facing, and I think from our consumers' perspective, yes, it's taking away buying power, but in my mind, it's taking away time, because you thought you had a nest egg saved up that will translate into this amount of money, this amount of time safely in retirement. Well, you just lost a lot of time here in the last couple of years. So those are the two. And I think the last trend is just volatility in marketplace. Happy to talk about it more, but we spend a lot of time trying to figure out how to take the risk out of accumulation of assets in retirement. And we've had an awful lot of interesting technology and innovation on the financial product side, on creation of indices. I think ironically enough, though, a lot of the efforts to control volatility have actually increased it. So those are the three big ones. Three big ones.
So I have to ask you quickly, Paul. You and I have had a conversation. We've had lots of conversations before, but one in particular, you were talking about the, kind of the loomingness of all of these conditions, and then the opportunity. Like, what is your reflection on and clearly there's a lot going on right now, right? But what do you see it opportunistically within, like what's the call to action? I call it like coming out of the fog, right? Like there's the fog of what's going on, and then where do you see the survivors and thrivers? What will they have taken as an opportunity in this macro environment?
Yeah, I think, and this will cut across every industry in every sector. The insurance industry is, well, with inflation comes pressure to save money for the company, hopefully put value into the product. And if you look back over the last 20 years, I would say, why have we not seen inflation? And I would argue China was probably the biggest deflationary impact on our economy. I mean, how do we get these TVs? How are we getting furniture, for pennies on the dollars what we paid? Now, China's leverage has kind of hit rock bottom. Now, Lisa, my question is, what can AI do? I saw in the paper the other day that who gets paper? Yeah, I saw that IBM announced they were going to lay off, I think, 8,000 jobs or something because of efficiencies that AI can deliver. And I think in our industry, I think there are going to be tremendous cost efficiencies by applying AI. Now, you're going to have a lot of executives who are saying prices have gone up. Our budgets aren't going up this fast. Lisa,
right.
How do we do this? How do we do this? And can AI take that cost pressure out? So I think anybody's got a solution today or an application that will help us take out either make back office functions run faster, cheaper, better using what we're seeing in AI, I think will be a home run.
Yeah, which we'll come back to that. I want to hear, and one thing that I'll just add as a cautionary tale, right? I always advise Insuretechs, don't go in with the OpEx play. And what I mean by that is you need to also connect yourself to the revenue generation side of the house. So I think you're right, which is we're going to have looming cost pressures, which means there's going to be a lot of no's, and a lot of just kind of safeguarding, I used to be a CFO, what happens when cost pressures come down, you tighten that balance sheet really in P&L. But there's also got to be an opportunity on the revenue side, which is how do you get more revenue and product design? And with that, I'd love to hand it over to you, Manish, for your kind of top reflections. And then, of course, David, and then we're going to weave into yet another round of conversation on this. So don't worry, we're definitely going to get into some of the opportunities for those listening.
Yeah, so in my role, I had the global insurance business for TechM. I've been with them for 9 years. Over the last 2 years, TechM has invested almost $500 million in building our insurance capabilities. And it's something we are all very passionate about. And how do we help insurers pivot more to a tech-driven insurer, right? And drive sustainable transformation and sustainable insurance within, innovation within their businesses. Now, if we look at, so some of the points were mentioned around, the pandemic is behind us, China has started to rebound. There is a synchronous tightening of monetary policy. So if you look at a lot of these items, it seems that the runway for the world economy for a soft landing seems to be right there. But the points like what Paul mentioned, both around elevated interest rates and inflation, are still serious issues for the industry, not only the general industry, but also for insurers. And along with that, your global trade is slowing down. You have the debt ceiling on the horizon. So there is a lot of anxiety within the businesses, which is impacting the investment scenario for organizations, right? Do I invest? Do I not invest? Do I hold back? Which percolates down to our businesses, right? To the carriers. Now, over the last 10 years, we've seen low volatility in interest rate environment. So what people have done is to boost increased returns, insurers have doubled down on illiquid investments in their portfolios. We see an asset liability mismatch in terms of how they've made their investments in structured and private credit. And in some cases, we are seeing balance sheet capacity issues, right? So they have to be far more selective in the risks they undertake, right? So be more choosy, which kind of leads to, better underwriting decisions and better risk profiling and better data-driven solutions.
So I have a follow-on to that, Manish, just quickly. Sorry to interrupt your thought, but just you paused, so I'm going in. Quick question for that. How connected are you seeing from your lens the macro down to the strategic imperatives down to then, innovation? Is it disjointed or is it connected? Because, we've often managed our balance sheet and our liquidity and our capital kind of like outside of innovation in that sense. So are you seeing a connectivity or fluidity? Is said differently, are the macro market trends connecting the asset optimization, liability matching side of the house to innovation yet? ...
That's a big question. So if you look at technologists, a lot of time what we see is just the total cost of operations of the technology stack is often a challenge, right? But I think as times change, it's important for the senior technology exec to have a better understanding of where the business priorities are and how these balance sheet issues and the financial issues create downstream issues in how they invest, right? And how do you drive more cost neutral digital transformation, right? So time and time again, you have a meeting with the CEO, chief operating officer. So they understand they need to invest, but what is the return on that investment, right? We've seen organizations spend millions of dollars on cloud and 3 years later, hey, what am I getting out of it? So having a holistic view on how you drive transformation, which remains to some extent self-funding and cost neutral, is absolutely important.
Yeah, no, that's super great. And my CFO heart couldn't appreciate that more, because I used to say like all dollars. I had a boss once. She's now the CEO of UPS, and everyone used to say what belongs to finance. She's like anything with at this time it was like with a dollar sign in front of it. Anyway, it was like all things should involve finance. She had a very strict position on that, which has probably enabled her success as the CEO of UPS. She was at Home Depot with me. But David, let's swing over to you. Let's round out this overview of macro trends. And then of course, you all know I have some questions for you. So David, what are you seeing as key macro trends and how is that affecting what we're up against?
Yeah, thank you very much, Lisa. Good morning, everyone. Yeah, in our capacity, we're after the life and annuity market. We're looking at product innovation and modernization. And we talked about digital transformation and the lack thereof. We started with Rohit and moved on to Lisa, and a little bit of that weaved its way through. And I would argue that it's more modernization is what we're seeing, right, than transformation. I think the carriers are feeling a little bit, and in the short term, I get it. The long term, I'm not so sure about it, but they're feeling, well, that whole disruption really didn't happen. It looks like these direct-to-consumers have really showed us how to engage customers, but they haven't disrupted our industry. And in fact, some of them are now trying to help us come along as platform players. So I think what we're seeing is, even though we're seeing some pushback on investment, I think we're seeing a continued focus on modernization. I think a lot of carriers are saying, okay, we did the easy stuff during COVID. We made our sales process somewhat digital, right? But it's still disjointed all the way back through, right? We've got some real issues here. And so I think we're seeing that trend of modernization continue. And I think they're realizing it's a little harder when you start to move from the front office to the back office and you're trying to tie everything together. So I think there's some real frustration there too. And to the argument, cloud spend, right? What am I getting for all of this? How do I look at this holistically? I think there's some real challenges there. But at the same time, we are seeing record sales in some areas, right? Volatility does bring some benefit to the annuity space, for instance. There's record sales, and it seems like everybody's trying to get into the annuity market right now, what we've seen. We've seen a lot of private equity money continue, a lot of startups. We've seen a lot of carriers who aren't in the annuity space moving over into the annuity space. We're seeing carriers who were focused more maybe on a portfolio that included variable products moving over more toward the guaranteed side of the fixed index and the registered products there. And again, it's still that problem. We're selling to the baby boomers and some of the millennials. We haven't figured out still how to sell to that younger demographic. So that's still a real issue out there in the marketplace, but a lot of opportunity right now, a lot of growth in the marketplace on the annuity front. The retirement space continues to be a huge focus.
Which of course I love, and you and I kind of reconnected that we were both at one of our former companies together, which of course was like where I first dove into annuities at a high level back in the day, back in the early 2000s. But let's take everything. So clearly there's a lot going on, right? Which creates opportunity. Like, when there's so much going on, some people can over-index on focus, and some people can over-index on being scattered. And so with a lot going on, it really creates playbook strategy. So let's move on and talk I'm going to offer this question up to all three of you, and I'd love to hear your lens on it. And Paul, we'll start with you, and then maybe we'll ping pong David and then Manish, but feel free to weigh in on one another because this becomes the more conversational part as well. But so lots of market trends. And on innovation specifically, what are we seeing as the impact of this on these partnerships? And then I'm really curious to know, you all, what playbooks are you seeing? So I'll call it I've got my my wristband, playbook 101, app consolidation, playbook 2, decreased spending. So what playbooks are you all seeing emerge? And how do you think they are either supporting or distracting from the long game? And Paul, kick it off to you on this one.
Sure. And David talked a little bit about the front end. If I spend some time to sort of talk about the guts of, how stuff gets done, I think it's interesting, at least everything kind of works in phases in this business. I think, there are two kind of trends that shape how it's taking place. One is how and where is innovation taking place in an insurance company? And then what are the operational strategies taking place? And it's interesting. They're coming together in some really, interesting ways. So I think, if I think back to 2014, 15, look, if you're a CEO and somebody asks you, well, what are you doing about innovation? I wrote a check to one of the name the 6 innovation firms, right, that were doing a lot of good firms. Okay, so fine, we went out, we did the show, we did what one of my colleagues and a number of people called with a little bit of sarcasm, the innovation theater. I think that it does a total disservice to what happened, but I think it opened, these road shows and road trips, I think opened eyes to a lot of companies. Okay, next, well, we actually need somebody internally to do this. Let's get an innovation lead, head of innovation. Okay, now we got the special person who's got the special group. Manish, you're not special, I am. It doesn't work too well for very long inside companies. And
the have and the have-nots. Yeah.
You're special, I'm not. It does not work inside an insurance or any organization very long. I think what we're seeing now is more what I almost describe as, you'd love this, not embedded insurance, but embedded innovation, where the innovation is pushed down. You've got people inside the group, and there are pluses and minuses, Lisa, because I think in one point perspective is you get somebody who's empowered, understands a problem, they can have their natural fit with a startup that solves a real problem for, on the edge. Now you sort of step back and say, but okay, how does all this tie together? Now I do see massive weird collision happening, because at the same time, the operational folks David, you mentioned a lot of, PE firms coming in, a lot of new management. What's your first order of business is get efficiency in the business. And a lot of these people said, oh my gosh, this back office is a mess. I'm going to give it to somebody else. Boom. And so now, Dave, you'd probably have the stats on this, but I bet if we had 50 back offices, doing significant business, even like 7 years ago, I bet that number shrunk to maybe 10. And then you've got some big companies out there who have long legacy history, and they're in fact buying up the Insuretechs and bringing the solutions to the table. So, wow, do you have a lot of, I don't know, this music doesn't sound really good right now, Lisa. I mean, we're trying really hard. It's kind of like your fifth grade, go to the fifth grade orchestra. It's like, yeah. It sounds like something. I'm not sure what this is.
Well, I think that's such a great segue, and let's go to you, David, next, because I mean, I spend a lot of time coaching and advising companies on these things, and it's like I literally was having a discussion yesterday with an unnamed large insurance carrier, and I was like, I'm telling you a pattern that it's like you're incrementally adding weight, and you're gonna get up to this state 3 years from now, and you're gonna be like, oh my gosh, I get, whatever, I'll make it up. I gained 60 pounds, like as an institution, like bloat. And I'm, because of the redundancies and the lack of thinking about this at an enterprise level. And the problem is, and Manish can weigh in on this, the problem is at an enterprise level, the thought is more day-to-day, like what you were talking about, Manish. It's like, how do I optimize my operations? How do I get to the cloud? But the layer of the CIO coming in and saying, I'll just give a very specific example. I'll use geospatial. We have material major redundancy in what we're paying for in terms of not only just data, but the processing that's going on underneath that. Because I talked to a couple of CIOs, a couple of chief procurement officers, a couple of head of innovations, to your point, Paul, and they're like, oh, we were just trying to get an image of the roof at XYZ clarity. And I'm just giving a PNC example just to kind of sprinkle that in a little bit. But that's not getting brought, like the CIO and the chief procurement officer aren't getting brought in, because right now the business is saying, I need to be able to see the roof and I need to be able to see it at this clarity, right? So over to you, David and Manish, to see how are you all seeing this impact of these market trends? Because I think, Paul, you hit on something really amazing, which is the macro trends, getting that at the right level. But then is there an enterprise view of this? And if so, who's really seeing all the patterns connect? That is a mouthful.
Yeah,
maybe
absolutely.
David, jump in.
Yeah, absolutely. What I heard from Paul is this confusion, how to stitch it all together, right? How to take this innovation, how to take being more efficient in the marketplace. And I got to tell you, I think that's a real challenge for all the carriers. And I've often said, if you really want disruption, drive out cost and bring flawless execution to the marketplace, because that is something that just does not exist in our marketplace today. I'm still hearing a lot of rumbling from the field about the whole sales process and the efficiencies, right? You might have this electronic engagement. You might get a nice quoting process, but then you get this disjointed process in the back office, right? And carriers, it's hard, right? Because they're not set up as agile organizations. And that whole innovation and that innovation officer, it needs to permeate that culture, right? And I've often thought, if you want to really transform, how do you transform an organization to be agile and to think about that end-to-end process and have process owners that think about that engagement all the way through? They don't just think about, because carriers are, they're optimized by departments and their efficiencies are within departments, but they're not by a user story, right? That engagement thread all the way through. Some are starting to think that way and say, okay, Agile is not just for the IT shop, Agile and product ownership, maybe that means something in terms of engagement all the way through. So what if a carrier could really optimize on that? What if they could look through that lens? What if they could pick their technologies and drive their efficiencies that way? Wouldn't that be a transformational play for the industry?
You've totally hit on something that's just been mind-boggling to me as an observation. As soon as I saw customer experience, so customer experience to me was this opportunity and innovation. I call it latitude versus longitude. So currently we're all longitudinal departments, functions, et cetera.
Right.
And I'm like, customer experience. And you hit on it exactly. You go from boarding the rocket ship, maybe when you purchase point of sale, to the hamster wheel and the cart and buggy when you get back into I need to change my address on my policy. Oh my gosh, right? Well, we took as an industry, customer experience and made it a vertical. And I was like, what? Right, just if you think about that as an oxymoron, right? Why is that not coming across all? And I would say that for a different webinar, there's some leaders that I've been talking to you about how digital, not even in insurance, one of the key influxes on digital, and Manish, it's going to be over to you now on the tech integration and tech details here, but we followed the post-industrial revolution hierarchical matrix org structures. So the very thought of org structures haven't evolved to be digital, which David, you're hitting on. That's like we could totally go there, but I love the fact that you're seeing that pattern too, because it's part of what reinforces what we're up against, right? We're not just up against the economy and the macro trends and all expecting consumer, and the cost of operations, but we're also up against this new digital in which we don't really have org structures that match it. Manish, what are you seeing in terms of playbooks?
So first, I think I'll respond to what Paul and David said, right? I think they're reading my mind, and maybe that's going to get published later today, addressing exactly the things we're talking of, right? In terms of how difficult it is for carriers to innovate. And we created these innovation offices, but it's not just a technology issue, it's a mindset issue, right? Till the mindset and the behaviors change, the rest of the work doesn't happen. And the traditional way of technology is if it's a new technology tool, we start addressing its technology, right? Digital is just not a technology change, it's a behavior and a cultural change, right? Going back to Lisa's point, I think from a playbook, the good thing is across carriers, even though there are financial headwinds, we do not see carriers reprioritize technology. So technology stays as an important initiative. It is still up there, right? And because post-pandemic and all the changes we've seen before, organizations realize that this is a one-way journey. You have to invest, you have to be more digital, you have to have automated processes and ability to innovate and be more agile with new product launches and allowing better data-driven decisions and data-driven underwriting. So the technology investments are still up there. What they're trying to do is, how do I balance off, right? How do I bring in efficiency? How do I bring in automation in making that happen? So orchestration of innovation between Insuretechs, between carriers, between service providers like us, I think is a huge opportunity. And the better we all collaborate, I think the faster we will help organizations run faster.
Yeah. So I'm going to just do a quick, if the audience has any questions, make sure you pop them in the Q&A. We started a few minutes late, so we've got one more question before we flip over to Q&A, but I don't see any yet. So I'm just going to ask you all for a quick lens on, okay, we've got the playbooks, we've got the macroeconomic conditions, we've got the traditional levers, we've got everything that we're up against. What do you all see as a force for making innovation easier? And I'll pick over to you, David. What do you see as something like a quick driver of that?
Yeah, so I think a lot of carriers are looking at their culture, right? And as we know, statistics, it takes 10 years to change a culture. So what do? I want to be innovative. I want to drive out costs. I want to drive efficiencies. I want to test the market. So we're starting to see some experimentation, right? Is there something I can do outside these calcified four walls around innovation? And I don't mean just around point solutions, right? Can I roll out a product more efficiency with a partner somehow, right?
Yeah.
And and get past this huge cultural digital morass that I have to change internally. Now that's a challenge too, because I would argue that the market there's a demand for that, but the market hasn't stepped up totally. So there's some players and some things coming on the horizon, but they're not there yet. I would say that thought process from the carriers, especially the C-level, is farther than the industry has realized and caught up to. So I think that's a real opportunity, because you cannot underestimate how hard it is to go in and change those internal processes, because culture gets in your way.
Culture eats strategy every day for breakfast, right?
Right.
But on your point, before we move over to Paul, just point solutions, great point. And the next section is going to be talking about Insuretechs. So I see them all listening and dialing in right now. The VCs and our investment vehicles reward point solutions. They do not reward end to end. So part of, you get what's rewarded. So like over to you, Paul, on that. But I think that's a great point, David. And I've seen the over indexing of point solutions by Insuretechs, and it's because that's how they're rewarded. So over to you, Paul.
Yeah, I think, look, how people get paid and rewarded and drives absolutely most of our human behavior, Lisa. So I think it's a great point. I think I do think there's a tremendous opportunity going forward with startups to partner with companies like Tech Mahindra, right? Because an organization like Tech Mahindra actually can see the bigger picture, can deploy resources and fill gaps that the startups may not be able to have. Listen, if I'm a VC, where am I going to get a 10x return, 5x, 10x return my investment? Well, it's going to be one of those smaller pieces, right? Because they can go from a little tiny number, a very little zero, like at least, to a pretty big. That one looks big for a small company. Yeah. And so I think that's kind of just naturally how this is going to happen. I do think, Manish, I think we got to rewrite the contracts between carriers and vendors, because we had some great procurement people who all they want to do is hammer down. We're only going to pay you X amount of dollars per contract. Don't care. Well, maybe we should have a contract that sort of thinks longer term and says, well, maybe if we spend a little more, Lisa, we could grow more in the future, or deliver a better experience, have more. So I think we just need
connecting it back to the revenue, right?
Yeah,
absolutely.
Manish, your thoughts on that?
No, I agree, right? I think we all kind of on the same page in terms of it's a mindset change. And by behavior, we all tend to want to do things ourselves. Go to a carrier, they say, I know what's best for us. We often tend not to collaborate and keep an open mind and saying, somebody's already built a tire, let me not rebuild one, right? So I think the industry is moving towards the Lego brick, right? More composable architecture, best of breed, bring them together, move forward. It brings the cost of innovation down. It brings your success rate much higher, and time to market is much better, right? So the more we embrace collaboration and get the Insuretechs and the partners and services, the faster we will run.
Awesome. Music to my ears. So I don't see any questions in the Q&A, and we've got a couple minutes to wrap this up. I feel like what a kickoff to this entire morning, afternoon, wherever you are, couple-hour webinar. I feel like the four of us could definitely continue on forever. But with that, let's have y'all like, we don't want to talk to you forever, crazy. No, with that, let's do a quick call to action, because let's leave our audience with, your 2 or 3 things that you would say in 1 minute or less that you think they should take from this going forward. And I'll start with you, David.
I would say, and this has been said, take a holistic view, right? It's great to look at the point solutions. It's great to look at individual type things, but how are you going to get that whole, forget transformation, how are you going to modernize? How are you going to get efficient? How are you going to take that customer engagement front to back, right? What are your levers? It's not just technology, it's right, people, process, technology. I would say if you haven't aligned all 3, be very wary and really get that championship sponsored at the C level, right? And that commitment at the C level.
That's great. What's yours, Manish?
So I would say, I think for the smart insurers, this has never been a better time to innovate, right? So with all the macroeconomic headwinds, even if you see P&C, while the top line is going up, the profitability is going down, right? Retention is a big challenge. Claims is a big challenge. So how do you do better risk profiling, data-driven underwriting, selective with your risks, focus on more tactical initiatives. So really essentially double down on innovation, more agility in products and solutions. Number two, engage your customers. A lot of them don't understand the implications of inflation and how covered they are, right? And can we start indexing policies for allowing them also to have a view in terms of how the business runs? And finally, cost neutral digitization, right? Understand the total cost of ownership, make it sustainable, understand how the core data center transformation, for example, can meet your ESG goals at a board level. So how do you make it more comprehensive and cost efficient?
Love it. What about you, Paul?
I'll sort of piggyback on Manish's comments, the agility notion. I would say take a lot smaller, quicker steps today because the technology is evolving so quickly. If you got a 3-year project, it should be break it up into a 3-month, right, to figure out if the step works or not. At the same time, I think on the financial side, we've got to think longer term. It pleases your CFO or your finance people if you can put an ROI against everything, but some of the stuff you just can't. We need longer horizons to make the right set of investments, or we'll just sit and optimize ourselves to the point where we can't do anything. So that's contradictory, but not. Get inside my head.
No, I love it. Well, I think mine, if I layered on, first of all, my call to action would be like, listen to these 3. Great points, great call to action. And I would just say, throw out the old playbooks. They're super tempting. They've always gotten you into the playoffs before. I would challenge you to say that they are not the playbooks you need to be activating right now. You need to reinvent your playbooks. Instead of, for example, moving to app consolidation, you need to move towards what is the redundancy. So cost neutral, but what is the redundancy and the ways I can think about things, and you can actually get in some applied sustainability in that too. So throw out your playbook. You as the leader in your organization will become successful far beyond your peers if you create new playbooks that enable you through this modern time. So thank you all. Look forward to the rest of the session today. Thank you for Tech Mahindra for having us here for this amazing discussion.
And thanks, Lisa. Thanks, Paul. Thanks, David.
Thank you so much for that fantastic discussion, Lisa, David, Paul, Manish. I think for me, the key takeaway was, of course, how tech evolution is bringing in and eclipsing the economic changes, and how the customer changes are evolving throughout. The expectations are changing, and how we're all looking at bringing in innovation through agility and changing the mindset and culture first. While we get geared up for the next panel, I was just thinking the first panel covered a range of topics. There is one more trend we've been witnessing recently. In these last few years, we've been seeing how important cybersecurity has become. And not just for the companies, but also for the end consumers like us who are looking into cybersecurity and getting some protection for ourselves. While we all take some few steps initially in this topic, but it's imperative that we look at it constantly, proactively. So Tech Mahindra also understands this, and Rohit also mentioned that we have another partner in Insuretechs who does exactly work in this space. So let me invite Sar, who's the co-founder of Surance, and I'll let him explain this point further. Hi, Sar. Thank you. Thank you for joining in.
Hi, Roshi. Thank you for inviting me.
So, sir, could you explain to the audience what does Surance do, and why do you think right now it's so important?
So Surance provides an end-to-end platform for personal cyber insurance. It's distributed as an add-on to homeowners policies or embedded or any other mass distribution channels. When I refer to end-to-end, I mean that we provide 24/7 stop attack services. If you do have a damage, we provide restoration services, and we provide a technology that prevents the cyber attacks all the beginning, and it all runs under a cyber policy or cyber warranty. One major issue that we are embedded into our platform is that we motivate the users or our policyholders towards a better cyber hygiene, being better, protect themselves better, and the more protected they are, they receive a better coverage. So since everything is around the warranty and the product, we provide much better financial product for better consumers, while we accept everybody. The reason that we chose to solve this neglected audience of individuals, as it's a segment that is under a huge amount of attacks. If we're looking at the recent FBI report, around 800,000 Americans reported to the FBI. And I'm sure you're all aware that reporting to the FBI is not something anyone would would choose to do. Reported that they had a cyber incident, and those cyber incidents costed them around $12,000 in average. This is something which is insurable, let's call it. And it's climbed. A few years ago, it was $8,000. From the other end, the insurance companies find it difficult to provide such a policy, and the other solutions like antiviruses are simply not enough. We can see that they exist for 25 years, right? And they didn't solve the problem. So the real problem here, as my colleagues in the previous session said, our risk now becomes more and more dynamic. You could see that a few years ago, we had the virus attacks. And 3 years ago, we had IoT attacks, and now we're experiencing phishing attacks. If we had to encapsulate that into a cyber policy in a single platform, or a platform that is developed by a specific insurance carrier, everybody would run into a wall when a new type of risk emerges, right? So we chose to create something which tackles this dynamically approach by providing those 3 tiers. And from the other end, we chose to provide something which is low touch to the insurance carrier. Since we heard how difficult is it for insurance carriers to create these digital cycles of assessing the risk and giving a response and having a digital distribution in place, we as a startup chose to take the heavy lift on ourselves. We have the platform, the service, the policy wording, and even in the near future, we will have our own ability to deploy capacity. where the insurance carrier has to only open 3 APIs and put us on their call centers to add as an add-on. And then if it's a win-win. The consumer receives great B2C experience and a great service. The insurance carrier gets into something new at a low cost. And we, as the assurance, are leveraging new consumers. And here in this play, our partnership with Tech Mahindra comes into place. Tech Mahindra has a very strong leaf of consumer help desks. And by combining our services or our technology with TechM's superpower, we are creating here not a small company of 20 people in Israel that provides some kind of a niche technology. We can provide now a global scale services that almost every insurance company feels comfortable to consume and to provide to their customers. And this is from one end, and from the other end, we can be deployed as part of TechM's strong relationships with insurance carriers. So we can be an add-on to TechM's existing agreements. Hopefully I did answer your question.
Absolutely, sir. I think it's amazing how you answered everything we were looking for. And it's actually interesting how Surance is bringing together cyber assessment, protection, and insurance all together. You know, it's a very relevant issue today. And honestly, it's perfect because it also sets the context for our next panel. If you see, you know, these days insurers, Insuretechs, service integrators are working on the intersection of innovation. And while, you know, you mentioned, and while we've already been speaking about it, Insuretechs, you know, started at one point with the point of view, many Insuretechs that, you know, we wanted to disrupt the industry, compete with the incumbents. But these days, they're more focused on bringing innovation and disruption in different components of the value chain, just like Surance is also doing. So without me giving away a lot of the context, I'll invite our next panel actually to discuss this and discuss how Insuretechs are moving the needle and doing better with less. For this discussion, we actually have some of the well-known faces of the industry, starting with Dale Tuck, Chief Information Technology Officer of Primerica, Dror Katzav, Founder and CEO of Attidot, Anupam Sharma from Tech Mahindra, Insurance Practice Lead. And to facilitate the conversation, we have Susan Winkler. She's the Vice President and Executive Director at Connecticut Insurance and Financial Services. Susan, over to you.
Great.
Looking
Thank
forward
you.
to this.
Great. As well as I am and the panelists. And Sarah, really great to hear the background. You and I met recently at the last symposium, so it's good to hear a little bit more in depth about your particular startup, since we didn't really have time in Hartford. Welcome. As I said, I am Susan Winkler, Executive Director at Connecticut Insurance and Financial Services, and a really warm welcome from the insurance capital of the US, where I am in Hartford. The panelists, we're today, you know, we're following Lisa and Paul and some of my other friends. There was a really great dynamic panel. So the bar has been raised for us to have just enough or a better conversation in our panel, which I think we're going to do. Our subject today, we're going to be discussing doing better with less, how Insuretechs continue to make an impact. And I'll set the context. We're going to address how things have shifted and how Insuretechs and insurers look at the new global pressures and what we're going to do to have Insuretechs take still a very prominent role there. We'll talk about innovation, where it's going, where it is, where it's being hosted right now, so Insuretechs can take note. On a competitive advantage, we'll look at how can Insuretechs set themselves up to have a competitive advantage in the world of global Insuretechs. We'll focus on customer expectations, how those again are shifting, and how we are managing to earn trust from customers. And lastly, we'll talk about data, because you can't have any tech webinar without at least one or two questions on data. So with that, I've introduced myself. I'm going to turn this over to Dale, then Dror, then Anup. If you could just say hello, tell everybody who you are, what you do.
Absolutely. So thanks so much, Susan and the team that set this up. So my name is Dale Tuck. I have the odd title of Chief Information Technology Officer at Primerica, but I head up a team of about 500 people as we focus a lot of our fintech or financial services around middle market America. I've been here about 18 months, and I can tell you that the topics that I heard in the end of the last panel and the ones we're going to be talking about today are very near and dear to my heart. So looking forward to a lively conversation. Thank you, Susan. Over to you, Dror.
Hey, good morning, good afternoon, everybody. My name is Dror Katzav. I'm the CEO and one of the founders of Adidas. My personal background is Israeli intelligence, served about 11 years in the Israeli army. And right after leaving the Israeli army, started focusing on life insurance. And particularly Adidas is focused on life insurance, life and annuity, and trying to figure out how policyholders act with their policies. What we saw over the years is that policyholders obviously buy policies from agents, but the turnover in the agency business is 2 or 3 years, while you expect the customer to stick around for 20 or 30 years. And you find yourself in a situation where the consumer has a product that they don't understand. You have an insurance company that was never built to provide services, and an intermediary that is gone, that is out of the picture. And when you try to tackle that from different perspectives, you see that policyholders end up retiring with 9 products. And they buy them from over 8 carriers on average. And that's probably the only financial product where you end up buying 9 of something, but from 8 different vendors. And on the same side, from the carrier side, if you and I go and buy a policy and my agent leaves the business and yours isn't, then the difference in lifetime value could be all the way up to 2x on average, 5 to 10x if the agent happens to be any good. So because of all that, what we do as a company is partner with the insurance company, get access to the data, and run models to identify those engagement opportunities to try and tackle retention and upsell and cross-sell and better engagement and so on and so forth, and then head this traffic back to the insurance company or the advisor to provide better service and provide better value over time. And obviously very excited to be on this panel. Thank you, TechM, for inviting me, and handing it over to Anup.
Hey, hi, thanks, Rob. So hi, everyone. This is Anupam Sharma. I go by Anup. Am I audible? Okay. Hi, this is Anupam Sharma. I go by Anup. I'm a digital transformation leader with a couple of decades of experience helping global life and health and PNC clients, help them transform through strategy, operations, and tech innovation. I'm a tech enthusiast, so this session is kind of very interesting and right where I like to operate. So I'm passionate about leveraging technology and differentiated offerings for solving complex problems of CXOs and the business and IT stakeholders. Right? So very excited to be on this panel, and would like to take this forward based on how the panel and excited to talk to you guys and take it forward based on Susan's guidance. Yeah.
Great. All right, let's dive in. We addressed when we first talked, there's going to be 2 questions I'm going to set to you. It's going to level set kind of the conversation of where we're going. But I think we all know that everything keeps shifting. Yesterday is different from today already, and we can't put some predictability on really insurance, Insuretech, and the entire world. So with that, let me ask you the first 2. I'd like everybody's perspectives because it's really important. You have 3 different perspectives here. We'd like to hear that. Are risk strategies changing as a result of all these global pressures? And does that provide opportunities for Insuretech? It's kind of a yes, no plus question, but I'd like to start off with Anup first, and then Dale, then Dror. Let's go with a quick answer on that one.
Sure, yeah. Thanks, Susan. So from my perspective, yeah, so the industry has been, there are several different macroeconomic pressures and the environment we live in, right? So based on that, the insurers have to adapt to new strategies in terms of tackling inflation, in terms of the high cost of claims, underwriting cost, and how they want to focus on acquiring new business. So the in terms of the environment, the focus has to keep constantly now be in terms of new business acquisition. It is on acquiring high quality risk, right? So risk assessment, understanding what type of risk they want to get into, how to reduce cost during a risk assessment, and also retention, especially if we look at the PNC insurance industry. With the 6-month, 12-month cycles, it gets difficult because it's very easy to switch and the cost is going up. So the risk strategies and the way insurers have to focus has to be aligned to better risk profiling with the defined, enriched business tool set, and risk in all aspects. Like, yeah, in terms of cyber, the cyber risk, the Surance team came in. There are several different products like a cyber right, which is similar to Surance for risk assessment itself for cyber, getting more data to the underwriters to enable them to make better decisions. So in terms of overall risk profiling, that is critical. And utilizing point solutions and Insuretechs overall to reduce acquisition cost and enhance the overall experience in terms of higher straight-through processing or leveraging AI or data AI ML tools is more and more prominent in the current world. And that is where we can work together to help insurers.
So I'm taking that as a yes and across all spectrums. So, all right, Dale, your answer on that.
Yeah, I love it. Sadly, it's always going to be a yes, but because I think there are lots of opportunities. But I did want to just reflect on something that I heard at the end of the last call, which was there seems to be a lot of investment made in point solutions. But really, from my perspective, I'm on the technology side of it. And again, I'm not just life insurance, we're financial services, investments, mortgages, and a whole lot of unregulated products as well. I really am looking at ways to address this burgeoning set of risks that just seem to be popping out of nowhere, and I'll describe them again. These are IT focused, but you know, things like even some very reliable providers in the past are tending to become less reliable. You know, I won't mention any names, but a major network provider had a major issue a few months ago with a large airline. We were affected by that same outage. We had an e-signature provider, won't mention their name, but yesterday they went down for an hour. That had a material impact on us. We had a cloud-based backup provider that went down on us a little while ago. Actually, they had a ransomware attack. So it's not just fighting for, you know, how do we manage the risks of insurance, but it's how do I keep an environment around that can manage a brand new set of risks. You know that you don't want to create the same, you don't want to deal with the same problem twice. I never do. It's always a brand new problem that's coming out of nowhere. So the focus has really been, and again, I want to make sure that the Insuretechs on this call get the value out of this, because I do have a philosophy that I don't want vendors, I do want partners, but it's about creating diversity, which is expensive. If I have to go from, you know, two network providers to 3, that costs me money. So diversity is definitely part of it. Redundancy is another one as well. And then moving a little bit of my focus from tech redundancy towards continuation of business. So if I know that there are going to be unknown unknowns that are going to start hurting my ability to provide a service, how can I help my business create a continuity of business plan that allows them to overcome that? And the last part that I'll kind of refer to, Susan, is something that I've been pondering a lot. And I don't know if you can see my window, but I draw on anything in my office. It's just, if you look at the whole trend of the industry, really in the 70s and 80s is where a lot of this data processing started to come into its own. The generation that put that all together are actually just the generation that are starting to retire right now. So there's still a lot of spaghetti that's out there that is being run by people that helped create the spaghetti, 30, 40, 50 years ago. And that's another risk profile for me. So again, addressing the Insuretechs, those are kind of some of the areas that worry me today. And I'm sure that they didn't worry me 2 years ago, and I'm sure I'll have different worries in 2 years. But the risk landscape is definitely changing.
Yep, you'll have different worries tomorrow too.
Exactly.
Yeah. Dror, how's this going on in the life insurance area?
So I think I have a yes, but answer. Unlike the previous two speakers, I think the fundamentals are the same. We still want to sell policies. We still need to service policyholders. We still need to underwrite. We still need to do risk management. All of those things remain true. The fundamentals are the same. Having said that, we live in a world, not just Insuretechs or insurance companies. We started in 2016. Since 2016, we lived through economy booming, economy busting, pandemic, war in Europe, now potentially recession and interest rate changes, and it's a lot of changes in a very short period of time. So, and that's not to overlay on top of that all the things Dale talked about, which is the changes in the technology space. When we started, AI was this thing nobody understands, and now everybody is playing with ChatGPT, 5 times a day. So all of those changes happen on top of all of the fundamentals that remain the same. And for Insuretechs, it actually opens the door for a lot of opportunities. And the biggest advantage we have, the Insuretechs, compared to the big institutions, is that we can pivot quickly. So when we start and see that there is a global pandemic, we can quickly pivot to solutions that cater that better. And when we move from the biggest issue being global pandemic to being the change in interest rate, we can pivot to that too. And when Dale was talking about how you need to find this partner and this partnership, we see it the same way, because we don't know and you don't know what's going to be your challenge 6, 9, 12 months ahead. But if we're going into this together, we need to build ourselves to make sure that we can service that whatever need that comes up in 6, 9, 12 months into the future, if we want to stay around, partnering with you.
So has assumptions changed, would you say? Dror, let's stay with you. Just in general, you heard the macro trends beforehand, and now looking at the world that we live in. So have assumptions changed in Insuretech in general? Is it something that is looked upon? Is it looked upon differently? Is it looked upon more as a part of the strategic planning, in your opinion?
Yeah, when we started, everybody thought that we're quickly moving into a world where everybody buys all the policies online. And it's like right around the corner. And that's what everybody talked about 2016, 2017, 2018. Me personally, I don't believe in that. I believe some products need to be bought online, but some products are big, life, pension, retirement decisions. I don't see you buying, 6-figure, 7-figure, 8-figure, policy online. But that was the thing, and all the startups were marching that way. And we now see many of the carriers pivoting away from that, saying, we understand digital, we understand direct consumer, but 95% of the business is still agents.
Yeah.
So I think the market is dictating where where we should be spending our time. And that is shifting in, at least in our journey, has shifted more than once.
I think that's great advice. The market is pivoting you into where you should focus, and that's great advice for the Insuretechs. Anybody else have a comment on that?
Yeah, I'd like to comment on 2 things there. The first, in terms of our personal research as well, my personal research, we're seeing the same thing. Even the millennials, they want somebody on the other side of the table for them, talking about their financial future. We call it a GPS. How do I navigate all the challenges that are coming? I mean, interest rates are going to decimate people's savings. So I completely concur with you. But I do want to make just one comment on ChatGPT, because it is becoming more interesting in the technology environment when you hear people saying, hey, I needed to write this Python script, so I had ChatGPT do it for me. But the thing, another set of risks, Susan, that we're navigating there is, data privacy, intellectual property rights, legal and compliance. So we're being forced right now to write some policies around the use of ChatGPT in content creation and code creation, etc. So it's just kind of fascinating because Drew's right. A year ago, this wasn't a problem. Now we're actively having to assign resources to it because it's almost uncontrollable. It's out there, it's in the wild, people are using it. So how do you get your arms around it? So very interesting comments, Drew.
And your point is well founded. I mean, if you're an Insuretech looking at ahead of what is now going to be litigious environment, those that are using this in a bad way, in a false way. We could look at Drake right now. There's a song out there, I guess, apparently that he did not produce, but yet it's out in the market as if it was.
Susan, and I think just going back to kind of the macro landscape, there was another hyper-converged infrastructure provider in the last few weeks. There was some 10Q, reporting done that some of their software might not be licensed to use it, and companies that are using that infrastructure are now at risk again. So again, trying to bring this back to the Insuretechs, it's definitely understanding the macro, but also figuring out how does that macro impact guys like myself, because I'm assuming Insuretechs want to get time on my calendar. So it's making themselves relevant within my context. And it's difficult because I get 1,000 emails from vendors every single day. And I wish I could respond, but it's very difficult.
And we're going to talk about that, how you get kind of front and center. What is that competitive advantage? But I want to just make sure, Anup, do you have anything to say on this before we move on to next questions? Because I wanted to give you a level setting.
No, I'm good on this. We have already discussed a lot on this topic. Yeah.
All right, I'm going to then move on to, we were starting to touch upon customer expectations and the movement of the customer. I think, Dror, you were saying, how you're going to buy life insurance is different. Obviously, there is some degree that we want it faster and quicker and less human touch, right? That there's some things that will be purchased that way, but yet other times that is not the case. So in your opinion, where we had that intermediary, or we could call it trusted advisor, because if you remember, the key to insurance is the fact there is trust. You are protecting that person, you are making them live longer and better lives. So in your opinion, what about the trusted advisor? Where is that going? And is Insuretech supposed to follow something there? What are they following?
I think it's a great question. My perspective on this is that the expectation of service have increased dramatically, and advisors, the term advisors might not fully represent what they currently do. Currently, mostly what they do is sell. And I'm not interested in being sold, I'm interested in being serviced. Throughout the years, I'm going to give you a lot of my money in, hoping that this money would come back in the time of need. But we definitely see from the data that good advisors that give good advices to their customers make their policies significantly better, because there are features in those products, there are ways to upsell and cross-sell, there are ways to navigate, there are ways to convert, and so on and so forth. And if you don't know that, you might be paying for features that you're not using. You might be using the product wrong. You might find yourself lapsing the product for just a random mistake, and nobody told you that that's going to happen. I think the level of service that the biggest difference that needs to happen, and that's where we're spending most of our time, is in upping that level of service, either through the carrier providing more tools, either directly to the customer or through the advisor, and the advisor spending more time there in doing this level of additional work post-issuance of the policy. And we see from the data, from an advisor perspective, that advisors that do so get significantly more out of that customer. Because, as I mentioned in the beginning, this customer is going to end up buying 9 policies. Most advisors sell the policy and move on and never speak to you, ever. And what you see when you ask these people, and we ask these people a lot because the work that we do, who sold you the policy, we get the answer something like significantly more than you expect. They don't even know who they bought the policy from. I bought it from Jim, who was, my roommate in college, and it's like, okay, where is he? I don't know. They moved on. They're now doing something else. So who is taking control over your financials? You don't know. Actually, I have a good example. If you look at the last, and then I'll hand it over. Good example. If you look at the last year, interest rate change, market, changed dramatically. Everybody looked at their stock portfolio. Everybody thought about their real estate and should they refinance their mortgage? How many people looked at a life insurance portfolio, annuities portfolio, and said,
Good point.
Is this a good time to make a change?
Yeah.
Yeah.
Good point. Yeah, we want to spend some time on this because Insuretechs need to know that this trust, this ability to continue that relationship in some regard is really important. I'm looking at you, Anup, and then Dale, because I both want you to comment on this. How do you build trust, and why is it so valuable in what you do, Anup?
Sure, yeah. Thanks, Susan. So, trust, I'll continue, take it a segue from where Dale and Dror left it, right? So, yeah, I think so the idea of trust, and initially the whole thought was not having a channel at all, and agent broker going away. And then slowly advisors and agent broker still a channel. So the business model evolved, and that is where the industry players need to come in. So we need to identify trends, right? So what trends are coming in? So advisor, for example, itself is think about it as a customer for an insurer, because they are selling business to them. So they are a critical stakeholder, and how to make the advisor life easier. So it's not about trying to remove a layer from the interaction or but to utilize it and to enable that layer with all the tools and expertise we can provide, right? And in terms of insurers with whom we work, so what they expect, because most of the Insuretechs come up with very specific use cases or solutions, point solutions, and which are required, which are important, which are innovative, which are disruptive, right? So where insurers need help, and I think so Dale and I, and we were chatting earlier as well, right? Where they need help is to kind of build a customized view for their ecosystem, how to bring in all the best-in-class solutions for their entire insurance value chain, right? And not just have life spot. So I think so that is where a critical system integrator and insurance industry team has to come in, because they can stitch together with the Insuretechs a solution which is still focusing on the industry trends, leveraging the best in class solutions and customizing it for the insurers, right? So that's where I think the value and the trust factor needs to be built in, and as a partner, what Dale said, right?
Yep, it's essential. It runs across all three components here. From the service to the insurer to the Insuretech. And Dale, same question. How is it important? Is it important? Is it important enough? And should Insuretechs value that the same way the insurance company does?
So I'm actually answer the question in two ways. The first one is I'll just back up Anup and Dror in terms of the experience of the advisor. We spend a lot of time making sure that our advisors have the tools they need to give the right advice. So it actually will start right at the beginning. Is how do you onboard a new advisor into the organization? How do we make sure that it's a frictionless experience for both the advisor sitting on the other side of the table from a potential client? How do we adjust that advice on a regular basis? If something changes, how do we make sure that advisor has a very simple, we call it two-click marketing. He clicks two buttons and all of a sudden he's enabled the ability to be able to communicate with his clients effectively. And that's actually been a big push for us for the last 2 years, is how do we put very simple tools in front of our advisors? And we have about 135,000 advisors. How do they connect with 6 million clients out there? And the result of that has been amazing. So the answer is yes, absolutely. And I think it's not going to get any less with uncertain times. It's going to get more. The second part I wanted to address, again, just because I want to make sure that the Insuretechs hear this, is I do need trusted advisors. I have a very complicated business. I have a complicated environment. You just heard the scale of my operation. So I need people that are actually able to come in, take a look at what I have, and not just flash, hey, this is what we do and you should have it, but seek to understand my problems first. And I will tell you, I've built an ecosystem of vendor, again, partners around me. And generally speaking, those vendors became partners when they invested some good quality time in not selling me what they had on the shelf, but really understanding the challenges that I had. And actually and I'll touch on the data question because I know we're going to bring that up in a moment. But as a 40-year-old financial services company, I have a lot of data spread out across a lot of parts of my system. Getting access to that is incredibly difficult. A trusted partner actually brought in an idea of virtualizing a lot of our data. They went so far as to arranging with the vendor to set up a demo to make it work in my environment. And that is one of 2 platforms that have allowed me to clean up 40 years worth of data, build a data catalog with all the data quality controls in place as well. So it's really two factors. From an insurance perspective, absolutely, you want to give your money to somebody who's going to look at it and treat it like their own. But as somebody who's buying services from Insuretechs on a regular basis, you've got to earn the right to be at the table with me, and trust is earned. And it doesn't come through a PowerPoint presentation, that's for sure.
And I think you just answered the question. The next one on the competitive advantage, how do Insuretechs get in front of you? How do they say that I have a solution for you? I think you answered the question already based on, I don't know if you want to add anything else to that, but I know that was a direct question. How do you get noticed amongst the many?
So it actually is one of, so I've been on both sides of the table, and it was always fascinating for me how hard it is to get mind share of the, the IT decision maker or the IT buyer. And this is not a popular one in the marketing age, but word of mouth does play a big part of it as well. I will chat to my peers in industry. I will chat to other CIOs and financial services companies, and I'll go, who's doing something amazing from
Wait
me?
a minute, are you saying human contact? Jeez, Dale.
I know, what a shocking idea. Hey, Susan.
God. It's hard enough when we have to pick up the phone and call someone. We feel like we're doing breach of peace or something, right?
And I think just the last element I'll give there is invest in my problem. I've got another partner that's actually spending 2 months investing in understanding one of the problems that I have with one of my extranets. Now think about that, 2 months of their time, and they're not bringing they're bringing their horsepower to try and understand my problem. They will end up being a multi-year partner for me. And once you're a partner and you've had the MSA start, it's very hard to switch. So people should take that into consideration. How much are they willing to?
I'm going to look real quick. I'm sorry to cut you off, but I know we have some questions. Dror, you have a very successful startup. Can you give some advice on how you got there? How did you navigate to be the best? Was it marketing? Was it product development? How did you gain market share? If you could give some advice, I'm going to look at questions real quick because I know we're running out of time. Go right ahead.
So to a large extent, I agree with Dale. It was a lot of crying to get to the point where people know who we are, and then at that point in time, trying to find what is the meeting point between what we have and what they need. And it's always, I'll put it differently. As I mentioned at the beginning, the fundamentals are the same. They all need to understand their policyholders. They all need to find a way to get in front of them. They all need to find ways to improve their IT infrastructure, but they all need it in a slightly different way. And I think one of the things we spent time on in some of our previous calls was doing the prep work, understanding what they need and how they need it and how we can fit into that is a great value add. And also mentioning in the context of this webinar, companies like TechM that spend their time in the IT organizations and know what the organization needs and how they need it and what are the gaps and what is currently a priority for them is definitely super helpful in us first getting this intel, but secondly, partnering with them to be part of a more comprehensive solution. So instead of coming in and saying, hey, Dale, here's like one bolt that you might be somewhere on your bucket list. Here's a whole comprehensive solution that solves 1, 2, and 3 off your priority list between what we do and what others do, orchestrated in a big solution that would solve some of your problems.
Great. I'm mindful of the time, and we could talk we have so many more things to talk about. I knew this was going to happen. I'd like to give each one of you an opportunity to have some quick closing remarks, starting with you, Anup. Anything you'd like to give, any advice you'd like to give to the Insuretechs as it relates to competitive advantage, trusted advisor, or how to be more visible?
Sure, yeah. So in terms of even in this volatile environment, right, Insuretechs remain important because there has been a lot of unnecessary debate, I would say, on whether innovation is important or whether Insuretechs are important. So in terms of my view, it's very clear that Insuretechs and innovation is critical. It is a differentiator. It is actually an opportunity in these times, right? So to create a differentiated offering and solution. So if the Insuretechs are still innovating, they have a good partner like what Dror was referring to in terms of navigating the insurance landscape, and jointly or otherwise, they create differentiated solution and solve real business problems, right? So this will remain relevant and will be critical. So in terms of my closing remark, I mean, I think so disruption has to be adopted. Any firm or insurer which have insurance as an industry has been a laggard, but any industry or any insurer which is not adopting it in a efficient manner, they are at a risk, right? So I'm quoting Steve Jobs: the ones who are crazy enough to think they can actually change the world are the ones who do it. So Insuretechs need to continue focusing and not getting demotivated by this whole environment.
Perfect. Dror, one word. No, I'm just kidding. What would you say to Dale, you have one word because we're running out of time. Quick advice to Insuretechs as a successful business operator.
Our approach always was that if you pick the tallest mountain, the climb to the top is going to be very struggling, but at least when you'll get there, you'll be at the highest mountain. So that's the approach we're taking. We understand that climb is a grind, but the prize will be worth it.
Yeah.
Never stop.
Susan, I'll be really quick. I'll be really quick in my final comments. Follow Primerica on LinkedIn. Connect with me if you can. Read our annual reports, and if you see something in there that you think will be interesting for your business and for mine, then please reach out. I try and read all the emails, but again, if it's just a form email, I'm probably going to ignore it. But if it's Adele, I read your 10Q, I see what you did last week on CNBC. We'd like to have a conversation with you about what we can do. You might get a chance.
Beautiful. I'm sorry to get to the questions. Tech Mahindra, thank you very much for the opportunity to have this esteemed panel give their insight. And thank you. Have a great day, everyone.
Thanks, everyone.
Thanks, everyone.
Thank you.
I think if you guys are still on the call, we could still answer at least 2 or 3 questions. Susan, if you want.
I'm sorry, I didn't realize what the time period was
That's okay. That's really okay. If you still want to pick up 2, 3 questions, I see a lot of interesting questions there.
There were. I just looking for my panelists to see if they're still on.
Yeah, I'm still on. This is Anup.
Okay. All right.
I see Dror also, I think, is there. I'm not sure about Dale yet.
I know Dale was up against time constraints, so he may not be able to jump back on, but let's see if we can answer maybe 2 questions. How's that sound?
Absolutely great.
All right. This one specifically, okay, here we go. I'm going to direct this one to you, Dror. Most of the insurance sales are through traditional channels, as you know. Should digital distribution be a priority? And how to approach innovation and customer engagement? We answered a little of this, but any other advice you'd like to give that?
I think the answer is going to be hybrid. People want to do the research online. People want to, I prefer reading an email over getting a phone call on a, just a cold phone call every day. But when I actually have a real question that I need a real answer, I may need to speak to somebody. So you need to find this hybrid solutions between the easy things that I want to do online without talking to anybody, and the harder things where I'm going to find 5 million advices, I'm going to want to speak to a person.
I agree. All right, enough. Real quick on this one. A follow-up question. emerging technologies, ChatGPT, we mentioned that a little bit. Will that address the skill and expertise gap, the talent shortage? Or is that gonna, for functions like underwriting and claims and customer service, in your opinion, is that gonna close the gap or not impact the gap at all on people?
Yeah, so not just ChatGPT, like in general, generative AI has, if we are talking mainly about skills, it does, like insurers have actually done training modules. There are Insuretechs who have created complete AI-led training modules, right? There is a Whatfix, there is a Tunimo, Uforma. So there are several Insuretechs who are focusing on training as an option, and they are leveraging not just ChatGPT, like generative AI as a concept, and that can help bridge the gap in terms of all types of trainings, not just the user level training, but also skill set level training. If that is what the question is, right?
Yeah, it's a TBD really. And while you assume some jobs will go away, I think there'll be many more others, even in the environment of litigation and you know, compliance. Those types of jobs may increase as a result. Would you agree?
Yeah, absolutely. It's very unregulated. So right now, the main challenge with the entire ecosystem, it's very unregulated. And how much to regulate, because regulation kind of directly interacts with innovation, right? So you, how much innovation and regulation are kind of contradictory to each other inherently, but there has to be a happy mix, and it's not just generative AI, right? So even in metaverse, that is a challenge. So most of the new technologies, that is a challenge which needs to be addressed, and skills might change. So like you mentioned, Susan, the same type of role might be a different type of role would be done. Like we spoke about advisors, actually taking that same example, what advisors did 10 years back is very different from what they do now, right? Because they are now focusing actually on advice. They don't have to find an Excel sheet to fill the data, to upload it and things like that. So there would be a change in the type of skill set of roles people do.
All right. Well, thank you for your time and for answering a few of the questions. We really do appreciate the additional time. Thank you for Tech Mahindras for giving us that extra bandwidth.
Thanks to you all. Thank you for accommodating a few questions as well.
Bye, everyone.
Thanks a lot, Susan, Dale, Dror, Anupam, for this and really engaging conversation. I see how everyone was asking questions as well. And honestly, absolutely true how, overall the risk landscape and the customer expectations are changing. Fundamental issues still remain, but these changes are coming on top of them. And to address this, we need customization and, building trust together, investing to bring the right tools together. And actually on that note, Dror, you raised the perfect point. Insurance is still bought via agents, but customer expectations have been evolving. Demographics have been changing. Baby boomers and Gen Z are not buying policies in the same way. And a lot of customers are now looking for a digital first experience. They may not buy online, but they still want all information on their fingertips. And think about it. We all want that, right? We all are looking for that. So actually on this note, I want to invite an Insuretech partner of Tech Mahindra, who's focused on providing connected omni-channel experience. This platform, it adds a digital experience layer to connect core systems with reliable data, insights, and integrations. So I'll let Itai explain this further. Welcome, Itai, CEO of Swifter Technologies. Thank you for joining in. Itai, you're on mute.
Thank you for having me. So yeah, that's a great introduction. So Tech Mahindra is backing Swifter. So what we do is a digital experience platform, the SaaS platform that empowers carrier basically to deliver best-in-class digital capabilities. So talk a lot about digital, but there are sort of various levels for digital. And Swifter empowers carriers to build, manage, and optimize any digital journey in a way that we provide a platform, a no-code platform that empower them with a composable front end. That's a term that has been mentioned today before about composability and a Lego. So this is exactly the approach, but not compromising on the quality. So we integrate with the core systems. We are agnostic in terms of product line across personal PNC, life and annuities, and commercial, primarily SMBs, who wish to be served as well more digitally. And that's this way enable us to help to any kind of product line in a way that the digital experience from any kind of one journey, any business process that a carrier wants to digitize to an entire consumer-grade application that delivers a new product innovation, new product launch, but also not only for new initiative, but also for the current process. So it's a fully modular platform. That's the approach that we see. It's not always you have a new initiative, new product, so it can suit to any type of business process. Now, the composability of a front end is not like a new term in general in the world, but for specifically for insurance, for us, focusing only on insurance allows us to have also a deep dive in terms of the feature set and have industry-specific features such as AI-powered data entry and policy analysis that empowers and basically takes the entire experience to the next level. So we can help to develop, and that's what we do, solution across the entire ecosystem, either for direct to consumer, but also for agents and primarily for agents. So we talked about it, it was mentioned today, and that's exactly the thing that, okay, there is a sale, but the question is, what about the service? Especially when we talk about younger generation, millennial is already something that everyone is familiar with, but Gen Z, they don't want to be even contacted over the phone. They are deterred from a phone call. That's where the future is going on. So maybe the service is happening by agents, and it needs to be in a way that the ongoing communication is very much similar. That's where the future is going. And also it enables to react quickly to market trends, specifically where you want to enable the launch of new products. So that's where we see in terms of use cases, the main value with our partners, and it's a great point that was mentioned today, that we see clients as partners and also partnering with Tech Mahindra. That's exactly the point where we know the value, the exact value for our clients in a way that it's a long-term partnership. That's the way we see it. It's insurance. It's not like a plug and play, but there are ways together to digitize your journey. Every carrier is in a different level of digital. The use case that we see in terms of the typical use case for Swifter is the tier 2 kind of medium-sized carrier wish to innovate, do more, and that's exactly the case of doing more with less. But there is reality, and eventually you have a limit for budget and fully booked teams, but you still want to innovate. And that's exactly the point where it's not only about the OpEx, which is obviously digital journeys reduce the OpEx, and automation and workflow automation. That's definitely something we help with, especially with agent journeys. But also it's about enabling and empowering the teams to bring new idea, new innovation, and also how to deliver and execute that digitally. So we see it as a more platform that makes digital very much accessible in a way that, yeah, I want to do this journey digitally and I can do it tomorrow, or I can do it in this quarter, and not can put it in the roadmap for the next year or two. So that's the main difference when you talk about composability and empowerment of digital. And the main point is, of course, when we talk about slightly about legacy and modernization, is about aspects of compatibility. So we do integrate with APIs. We need the APIs, and that's something that we also see a synergy with partnering with Tech Mahindra, understanding these challenges, and that's really where the partnership comes handy as well, where there are some initiatives for application modernization and so on. So yeah, it's really for us fascinating partnership to understand and deep dive into the needs of the potential carriers that want to take their digital to the next stage, upgrade their capabilities.
Absolutely. Thank you so much, Atay, for covering this. It's great how Swifter is, helping the industry move towards accessible digitization and, addressing a challenge which has been on the minds of all players, be it insurers, Insuretechs, or service integrators. And I am sure the importance, like you mentioned, is going to increase going forward, considering the new generations don't want to, work as they used to before. So thank you. Thank you so much, Atay.
Thank you very much. Thank you. Thank you, everyone.
And actually, on that note, moving on to the next panel of the day, we want to address last, but one of the most important topics for the day. How are we bridging the gap between insurers, Insuretechs, and how are we connecting the ecosystem? And for this dialogue, I'd actually like to invite some of the best in the industry. Frank Schmidt, CTO at Genry, Heather Richards, Vice President of Go-to-Market Strategy at Verint, Pooja Kane, Head of Consulting and Solutions at Tech Mahindra. And to guide the forum, we have John Keddy, Senior Principal from Itanovarica Group. Thank you so much for all joining in. John, over to you. I'll let you take the conversation forward.
Absolutely. Thank you very much. And good morning, good afternoon, and good evening, depending where you're calling in from. I have the great opportunity to facilitate this discussion and looking forward to it. So as we think now about insurers and engaging with Insuretechs and a journey to realizing value, it seems to me the journey is very different from ancient times, like 18 months ago. And it seems that it's very different on all aspects of the journey. Obviously, there's some headwinds. There's uncertainty about the economy. For Insuretechs, there's been issues with valuations. And indeed, some Insuretechs and fintechs haven't made the journey, and others will exit in the next year or so. But I would argue that there's also very powerful forces that are positive around innovation, and that will accelerate innovation or may require innovation. And insurers will have to look outside of their four walls, either to engage with technology solution providers or Insuretechs or fintechs. So to join me on today's conversation, I'm joined by some very experienced leaders who have actually delivered value and have great experience on all these topics. Their backgrounds are diverse, their opinions are strong, so don't turn away for a moment, because I think this will be both insightful and provocative. And maybe we could do some deeper introductions. So maybe we'll go Heather, Frank, Pooja, and I'll do an introduction on myself at the end. Heather, would you like to start us off?
Yeah, absolutely. Thank you. It's great to be here. So I'm Heather Richards, and as you said, I lead the go-to-market at Verint for our digital first engagement portfolio. So what we provide, what we describe as an open customer engagement platform that utilizes really best-of-breed customer engagement applications built around data and AI. And I know we're going to be talking a bit about that today. It seems like all the other panels have. But really, we're focused on making sure that the end-to-end customer engagement, all the way through self to assisted service, workforce engagement applications, experience management, et cetera, all come to the fore when trying to solve the not only the insurer's problem, but also their end customer. And so we're really trying to bring value here through our own customer engagement experience and these best-of-breed applications I was talking about. So we really see a synergy actually between both the Insuretech and the insurer to drive innovation in that respect.
Frank?
Yeah, thank you, John. My name is Frank Schmidt. It's a pleasure to join this panel, and I lead IT at General Reinsurance Corporation, headquartered in Stamford, Connecticut. We are a leading global reinsurer and a proud member of the Berkshire family of companies. I'm responsible for delivering technology solutions to the business and the corporate functions. And we are cloud-based. We are nearly fully in the cloud. In our case, this is Microsoft Azure. We still have a couple of legacy applications on the mainframe, but they will go away as we modernize our applications landscape. Now, regarding the diverse backgrounds, yes, I'm not IT native. In fact, I'm an economist by training, worked as an economist for many years, then joined the insurance industry, was a business leader for some time, and now I'm actually on the technology side. And I must say, this is quite an exciting time to be in technology. Back to you.
Thank you. Pooja?
Thanks. And first of all, hello, everyone. Thank you for being with us on this webinar. It has been great hearing so many interesting perspectives, and I'm glad to be sharing my thoughts with this panel of leaders. Thanks, Heather and Frank and John. I had consulting and solutions for our unit here at Tech Mahindra for the insurance business. We are a team of domain experts, business consultants, and enterprise and solution architects, backed by our technology competencies that cut across different domains as well. So, and as a team, we are focused on stitching, on working on this problem with stitching solutions, right? On putting together value equations that can solve problems for the insurers. In our experience, it has been a privilege to be a partner and privy to transformation for some of our large global insurers and reinsurers, and that has been helping us shape our point of views that we think can be empowering for the ecosystem players. So glad to participate here. Over to you, John.
Thank you, everyone. And I'm John Ketty from IT Navarica. We're a technology advisory firm. That means I get to spend all day, every day talking to CIOs, CTOs, head of data, head of cloud, head of transformation, chief underwriting officers, COOs. And as soon as we end this webinar, I'm meeting with a CEO in his all of his direct reports to talk about a technology topic. In addition, we also engage with leading solution providers who have expertise and skills in the insurance industry. And third, and certainly not last nor least, from time to time, I get the great opportunity to work with Insuretechs, fintechs, and startups, and disruptors, and that's always a fun part of the week. So with this panel, why don't I queue up some topics and we'll see where the conversation leads us. So as we talk about going on in a journey and innovation and synergies and all of those things, well, you have to first start a journey. And as I said in my opening remarks, this feels very different time from, say, even 18 months ago. It seems it's been impactful for the journey. So how should companies think about, well, what have we learned in the last 18 months? How do we now look forward to the remainder of 2023 and in 2024 around innovation and engagement? And Frank, if you don't mind, maybe you could start us off with some thoughts.
Yeah, thank you, John. Well, the rise of Insuretechs clearly is an important development, right, in the insurance industry. No question. The question is, how impactful was the rise of Insuretechs on technology that's being deployed in insurance, and how impactful were they on how insurance business is done, and especially done profitably. And that's not identical, right? And here is, I think, an opportunity for mutual inspiration between traditional insurers and Insuretechs. Insuretechs are very good at developing and deploying technology, and traditional insurers are very good at running insurance profitably. And so I think traditional insurers and Insuretechs can actually learn from one another. Now, Insuretechs have developed and deployed technology in our niche markets and also niche technology fields. And much of it is really in the consumer segment and in consumer mass market, where you have a fair degree of product homogeneity, right? And that lends itself to algorithmic assisted underwriting and claims handling. So clearly there are areas where Insuretechs can inspire traditional insurers, and we'll talk a bit more about where that can be and the role of AI. But I think there is also, I think Insuretechs, I feel, can also still have to catch up, I feel, on how the insurance business is actually being done based on the profitability of Insuretechs, which is not yet maybe where it needs to be. And the Insuretech model is clearly not adoptable by traditional insurers wholesale, but I think there are areas where, yeah, traditional insurers should feel inspired by Insuretechs. Back to you, John.
Yeah, I think that's really helpful. You identified synergies and you identified challenges and opportunities. Heather, how do you think about this?
Yeah, I mean, I agree with one aspect that Frank was talking about. I mean, I agree there isn't one size fits all. And so you can learn, you know, whether it's from Insuretechs and insurers or even looking outside into other segments. What we've seen is that there's absolutely the need to address not just the customer experience. And I know that there's a lot of talk about, okay, the disruption that's gone on. There's a lot more need for digital channels, self-service, et cetera. But also what Insuretech can bring to the workforce as well, in terms of driving innovation and more seamless interactions, regardless of whether they're assisted or a self-did service. So what I think is interesting is what we've seen is that innovation is actually being driven across sectors, like I said. So for example, technology that had really early adopters in maybe sectors like retail or travel, or even customer experience elsewhere, you know, the technologies that we use for family and friends, is now being adopted by insurers. And I think it's actually been driven and accelerated by what's gone on in the market, as well as things like the pandemic and everything else over the last few years. But it's also being accelerated just because customers now have different levels of expectation in terms of where and how they may be wanting to engage with the insurers. And so what you see is this really interesting cross-pollination of applications and technology for both the workforce and customers being adopted, I think, probably at a faster rate now than would have otherwise.
Yeah, I couldn't agree more. I like your theme. And sometimes we say here, one size fits all may mean one size fits none. And I also think that you're bringing up the cross-industry forces, totally aligned with that. I think there's technology forces where we do have to look across different sectors within the economy. Pooja, what's your experience and what would you like to bring to this discussion?
Hey, thanks, Don. The approach to innovation, right? That very question that you framed is interesting. I think the first panel already stressed a lot upon everyone, whether it's the Insuretechs or the various IT and business stakeholders within the insurance organization who are looking to innovate, who are looking to build these centers of excellence, research, and create solutions. I think everyone needs to start looking at solving a business problem as the guiding factor, and that I think is important to the approach of innovation. Another thing that I think is important is is knowing what problem to solve or identifying the right problem, and that is where a feedback loop in terms of the constant changing models, the exploding data sets, or the new products that the insurers are trying to launch. So how do you create this feedback? And I think that's one space where collaboration is really called for. And Lisa spoke in the first panel about funding for Insuretechs coming from point solutions and not an end-to-end problem that can that it can solve. So that is interesting, right? How do you identify this problem, and then how do you so that may secure funding, but then ultimately how does it come mainstream into the business processes, into business transactions? And I think that's where it calls for the ecosystem collaboration.
Yeah, I think your points on feedback are really important to the whole process and thinking around innovation. Often we in insurance, we tend to be left brains and we want to proceed in a very linear fashion. Some of innovation, I think, is exactly what you outlined, focusing on the business problem, going for a while, taking feedback, and then adjusting. So I think all of those comments are really helpful. Now, I don't think this is too speculative, but I would bet there are many people on the call who are thinking now about innovation and journeys around AI. And I say that based upon the fervor, and it has reached almost fervor pitch in my engagement around ChatGPT, which is driving broader conversations around AI and understanding. So let's say companies are thinking about the AI journey. How will they drive value from AI, and how should they think about it? And Heather, any thoughts on that?
Sure. I mean, I think first it's really important not to think about it as kind of AI for AI's sake. And for a while I thought we'd moved away from that mindset. But as you just said, with the advent of ChatGPT, which has captured a lot of people's imaginations, what I'm seeing in many cases is this rush to utilize generative AI models, for example, without full thought going into the business outcomes or the customer experience or even the business value. So I think in order to drive value across this journey, it's really important to start utilizing AI and look at the different models available, whether they're large language models, whether it's NLP, whether you're looking at conversational AI or speech analytics, to make sure that you're actually looking at accelerating efficiencies and outcomes for the customers in the workforce. I think the second thing that needs to be taken into consideration is not just the AI, but the value placed on the quality of the data being used to drive the models and the outcomes. So if you look at large language models, they're really powerful for some use cases, particularly things I think in a business sense like auto summarization. But you need to start looking at utilizing, I think, brand and customer specific data to drive personalized experiences through AI. And I think that's going to become more and more important to really drive differentiators and also value to the insurer themselves.
Yeah, I think what you say is so important. There's multiple flavors around AI or of AI. And definitely the excitement around ChatGPT and large language models is absolutely creating confusion. And in our case, we're seeing CEOs and boards are driving a lot of the questions, but then people are confused. They're trying to think it should be a calculator or it's a search engine, or it's chatbot, and it's not anyone's fault other than it's just a reality of how fast this world is moving. Frank, I think you have some pretty good experiences and insights here. What's your view on this topic?
Yeah, John, you made a good point, right? I mean, it happened so fast, right? And it surprised us. It's happening fast and it's powerful. And it also affects all of us. It affects all employees. And so that's clearly an exciting time to be in technology. Now, being in technology, right, it affects us in two ways. One is the way we deliver our technology solutions. For instance, we use GitHub Copilot to assist in coding, as an example. But also what we deliver. So we are both the object of transformation. AI transforms how an IT department works and how the product is delivered, and also what IT delivers to the firm. So it's interesting to be both the object and the subject of transformation. Now, we are working with vigor and making OpenAI models available. We are, as I mentioned, in the Microsoft Azure cloud, and so we are working on making Azure OpenAI service available to our employees. I think when new technology arrives, it's not always a priori clear how it should be used. I think there is, when you think of machine learning, where you have to trade off between exploitation and exploration. Here, we are heavy on exploration, and we want to make it available to our employees because we want our employees to become familiar with the power of the tool and then develop the use cases. So these use cases will come from the business and corporate functions back to the technology, right? Now, in all that, we do emphasize human agency, right? For us, the way we look at AI, it's a co-pilot, right? The term Microsoft uses, it's not the pilot. So human agency needs to be preserved. And I think speaks also to Heather's comments, right? And in doing so, I'd like to answer one of the questions in the chat, right? How do regulators think about ChatGPT? Now, I'm not authorized to talk about regulatory matters, but I would like to say that one of the proposed regulation that has drawn a fair amount of attention is the Colorado regulation for life insurers. And when you read the regulation, the word artificial intelligence or AI is not mentioned a single time. And yet it is billed as the comprehensive watershed regulation in AI. Because what it really talks about, and other states have similar approaches actually, is rule-based decision-making, right? Where it is impactful, where it affects the consumer. So it's much broader than AI, right? It's rule-based decision-making. Again, for us, it's really human agency must be preserved. Now, the way we want to make this available in the company is in two ways. One is clearly engineers will access the Azure AI service through REST APIs, Python SDK, or Microsoft's web interface like Azure OpenAI Studio. And then business users will build the environment and with our low-code platform, so business users will have a convenient way of accessing these open AI models. But we are very keen, in fact, on making that available. And I think it will naturally, use cases will evolve naturally. And also the interesting thing in the context of Insuretechs, I think the arrival of these large language models of generative AI does contributes to closing the technology gap between traditional insurers and Insuretechs. In fact, and also many vendors in the Insuretech environment that, they sell products like summarizing medical documents, etc., is now available off the shelf, if you will, at fairly low cost, actually, to traditional insurers. So I think this shifts the balance in favor somewhat of traditional insurers now. Back to you, John.
Yeah, no, appreciate those comments, on regulators. Recently, I was invited to a call to address some regulators, a call like this. I looked up and there were 130 different regulators had joined the call. So there's definitely a lot of interest in this topic, and it's, unclear to me how that will play out, but definitely they'll have a role, as they should. I think your other points around human agency, thinking about where co-pilot versus pilot are really important as we begin to think about how do we adopt different AI tools into our organization processes and approach going forward. Pooja, what would you like to add to this discussion?
I think every panel has touched upon this topic, and I absolutely like Heather and Frank's point of view as well. So I think, and without deliberating much on the need, etc., but the insurers. I mean, what we've witnessed is that there are POCs, MVPs that were happening and that are happening, right, with the AI, setting up an AI ML center of excellence and investments, etc. But I think the external trend, the external technology driver, if we call it, like a ChatGPT, have certainly accelerated that, and the cost of scaling this up, to a business solution may initially seem to be inexpensive. I think a lot of deliberation and a lot of decisions need to be taken in really rolling it out with live data into production, into making it effective for probably better agent experience or self-service for a policyholder, or risk assessor efficiency, or bots taking over live agents. How do we how is it all going to really make an impact? And that is where I think a lot of work needs to be done. So it is interesting how this will roll out.
Yeah, very, very consistent with the engagement I see. We see many companies, or say probably most carriers, are ideating, talking, thinking, but a fair number are doing proof of concepts, and it's not always the largest companies. Even some moderate sized companies are engaging in proof of concepts, trying to come to a deep understanding. And I couldn't agree more. This is truly a fascinating time for our industry. So it sounds like overall fairly optimistic about AI. I think some very pragmatic insights have been given here, but let me then be a little more pointed. Do we think that all insurers are equally positioned? Let's say we are now emerging into the age of AI. Do we think all insurers are equally positioned to deliver value, to partner with external entities? Or do you see that there's some challenges? Or what will differentiate one organization from another organization in being able to really advance themselves in AI? Frank, would you like to start us off?
Yeah, thank you, John. Well, it has happened before, right? That insurers missed out on new technology arriving in their line of insurance. And sometimes I think it's just not recognizing the power of the technology, or it's being recognized and there's a failure in change management, because once you recognize the power of new technology, it boils down to change management. Now, with artificial intelligence and some other new technology that is arriving, actually there's a third aspect, and which is you have to be cloud-based. Now, I'm coming from the field of finance, right, and financial economics, where there is what is called real options. So when you make an investment decision, you usually traditionally go by a positive net present value, and then, if it's positive, you make the investment. Now, real options extends that concept, and it's about opening up option values, options for the future. And so our decision of going to the cloud was that it's an open system, and there will be options available to us by us being in the cloud that would not be available to us otherwise. So this was a deliberate decision. Today, if you're not in the cloud, much of what we are talking about here, AI, but also other technology, will not be available to you. So it's absolutely critical. And so again, we did not, of course, anticipate the advent of AI, but we knew that the cloud is an open system, that as new technology arrives, we'll be able to benefit from that. And so it's really an architecture question. So once you recognize the importance of the cloud, once you recognize the power of new technology, in this case AI, in my view, it boils down to change management, because it affects all of us, all employees, and affects many, many employees in rather profound ways. And there will be important changes to the workplace, right? I mean, arrival of new technology leads to automation, but also to augmentation. So automation means many roles will go away, especially in administrative areas. And there's also job augmentation, meaning there will be new roles emerging from new technology. One is the prompt engineer, right, in ChatGPT, but this is one that made the headline. But there are, and there's a big change in the skill demand, and there will be winners and losers in every organization and also in society, and managing that change. I think that will be the make or break decision. That's my view. Back to you, John.
No, it's super informative and insightful. I think, you know, what you brought up at the beginning is you brought up near the end, the failure in change management, the challenge in change management. I think all of us on this call, when we engage with different organizations about innovation, culture, change management, these are recurrent themes, and I agree with you, there'll continue to be challenges here. I also think your point on the cloud being a predicate for success is really important for companies to think through. Heather, what would you like to add to this conversation?
Yeah, I mean, the question was around, I think, some of the challenges that are being faced. I think a huge part of the challenge introduced by the recognition that AI can be quite powerful and serve a great need, whether it's within the organization themselves or for their customers, is data. And we talked a bit about this, but you know, most insurers, for example, that we work with have a multitude of data sources, particularly around customer engagement or workforce data. So there's, you know, the interaction channels and scheduling data and forecasting data and surveys and feedback and employee performance data, et cetera. And it's a long list. You know, and a lot of organizations have this in silos, or it's not normalized or accessible, et cetera. So that one of the challenges, it's this mess of connections that are created, where data sources are almost managed across disparate locations, et cetera. And what do you do with that? How do you actually harness that? So one of the things that Verint provides is what we call an engagement data hub. But what it allows you to do is start capturing all of this interaction data and normalize it in a way that can then be reused, either for building better customer experiences, for example, identifying common intents for conversational AI, or looking at things like speech and text analytics to drive better performance within the workforce itself. So I think making sure you have a way to normalize the data, capture the data, whether it's workforce or customer engagement data, and then utilize that downstream to drive all those AI initiatives that you have, to drive those personalized experiences, better efficiencies, becomes really key. Because that's the thing with AI. It's going to be as successful as the data it's using, both to learn in terms of the models, but also then drive those automated experiences.
Yeah, I think that's just critical, Heather. Having the right data. And I think often in the insurance industry, we think, oh, we have a plethora of data. And certainly CEOs, boards, companies have been investing a lot in data. I think as we enter the age of AI here, we're going to find out which data investments were prudent and which ones weren't. And I think you brought up some really important themes. Pooja, what do you think of this topic? What would you like to add?
Sure. John, I think Frank brought up the whole cloud adoption as a topic, and I think that is absolutely relevant, and it cuts across any area of innovation or modernization. And Heather, you spoke a lot about the ability for an insurer to leverage data in various pockets. When it comes to cloud adoption, right, we are seeing various varying needs to adopt cloud. For example, the LNA carriers are not rushed for elasticity, for example, and hence, and data again being the key theme, right? Archival of data, can they look at leveraging cloud solutions for backup and disaster recovery for their storage related requirements, given their regulatory mandates and so on, versus a PNC industry where there would be more agility and scalability required. CX, of course, is across lines of businesses, but innovation in CX and leveraging cloud to be able to quickly integrate with ecosystem partners. We are also seeing that adopting cloud and leveraging data for new lines of businesses that probably insurers are going for, or the trend of embedded insurance, for example. The end-to-end tech stack can be, born in cloud or can be completely in the cloud, but modernizing legacy solutions and bringing some of the platform capabilities that have been around for decades into even breaking into parts and moving to cloud, or bringing in data-led insights is a challenge. And that's again where a lot of architecture decisions are called for.
Mm-hmm. Yeah, so a lot of themes around data as we close that question, and very, very understandable. It seems to me over the last several years that for many companies, the data lake's sort of been like the go-to paradigm. We increasingly at my firm talk about data lake houses being a more helpful paradigm, because many companies, not just insurers, went and built data lakes and then they drowned in their data lake, and it wasn't a very good experience at all. But as we think forward, and I agree with everything from the last question, that data is just so critical. How should companies be thinking about innovating with data? What are some lessons learned? What are some best practices that you all have that you'd share with the group? And maybe Pooja will just stay with you to continue your thoughts.
Very interesting question. Yeah, certainly, John. Maybe I can get started, because for us, I think we are seeing two things, right? Successes as well as lessons learned from the work that we're doing in moving data to cloud. For the last few years, we've worked on moving, all the on-prem data to cloud, using next-gen data platforms, creating observability solutions across various enterprise tools, etc. But what we then stop, pause, and question ourselves is, what value did this effort really create for the insurer, right? And they deliberate internally as well. And would it? And then we start looking at the business functions, right? Would a sales function be more proactive in adopting insights from data and creating a growth impact, or a differentiated CX for the policy administration? So and then would it have made sense to move only that data which is necessary, and rather focus on the end-to-end journey of moving data to cloud, building the analytics solutions or the necessary, interventions that can then actually impact a business endpoint. So that has been an important area for us to deliberate with our customers, with the insurers. I think the second thing is also the availability of all the solutions, right, across our technology partners, our Insuretech alliances, and our hyperscaler partnerships. They always push us to rethink our solutions. Should we look at data virtualization? Should we look at leveraging a modern, a way to use data at rest or at source, like federated learning, which we looked at an interesting Insuretech create this solution. So how do you really, again, focus on business value first and then start defining these? And while we define these, I think, Heather, you already touched upon this point, which is having the right foundation for data, right? So the traditional things like master data management, data quality, data integrity, and so on, right? How are we solving for these fundamental problems while building all these advanced technology solutions on the top? So that is, again, an area where we are seeing insurers relook at their complete strategy, whether it's at Customer 360, Advisor 360, and so on. And again, Insuretechs can play a broader role along with the traditional software solutions available.
Well, and to your point, I do think Insuretechs can have a play here also, as carriers are trying to get their minds around their knowledge of legacy data, but how you take advantage of more contemporary solutions. Frank, what would you like to add to the conversation?
Yeah, John. Well, we actually started out devising the architecture against the background of being a global reinsurer and operating in a fragmented data privacy landscape, right? Once we had that architecture, we had to make a decision whether to pursue a big bang approach or be opportunistic as far as the data lake is concerned. So all the data is in the cloud, but data lake, what is the role of the data lake? And so we decided to pursue an opportunistic approach. So every time we build something new, or be greenfield or modernize a given application, it's data lake first. And so that kept us from being overwhelmed. And so our experience is quite positive. Again, it's an opportunistic approach. It was a deliberate decision. It's also the low risk strategy, right? Risk does play a big role in our decisions. Now, when it comes to the cloud, right, one aspect that we should keep in mind is, the data usage data architecture and data usage has to be optimized also from a FinOps perspective, right? The way the data flows, it depends really your expenses, how you get charged. You have to exactly know how you get billed by the cloud provider. And then that can make a big difference. So that the billing schedule, if you will, the pricing structure of your cloud provider is a big driver as well. Back to you, John.
Yeah. Well, clearly you're a man who didn't drown in the data lake, and I think your opportunistic outline and paradigm is really important. And thank you for sharing that. Heather, what are your thoughts on this topic?
Yeah, I think it's interesting to hear Frank talk about the idea of the data lake and how it's being used. And I think from Verint's perspective, what we see is a lot of customers that absolutely have their own data infrastructure, data lakes, et cetera. And where they're struggling is to where and how to get that bi-directional flow, I think, of the data set up between the engagement and business applications that they're using, those like, what Verint's providing for customer experience and workforce experience, into the data lake in a useful way, and then also being able to utilize data in the data lake to actually drive customer and workforce experiences. So what we're really looking at is how you can utilize the customer engagement data and get it into the data lake as appropriate so that it can be, post-processed, visualized, et cetera, for all the reasons that Frank was just talking about. But then also reused to drive this idea of, customer and workforce automation. And until it's normalized and until you have a way to first capture it and get it into the data lake, it's not very useful. And so we really focus on this idea of the engagement data hub, like I was talking about, where you can basically get all of the data from all of those engagements and then start utilizing it to build out different experiences, whether it's through adoption of conversational AI, whether you're looking at things like building automated, IVR experiences, understanding where there's friction in the customer journey, et cetera.
Well, I could talk to the three of you all day and all afternoon, but we're getting close to the end of our time here. So as we have just a minute or two left, what would be one or maybe two takeaways from this discussion? We've covered a lot of ground, but as we think about all these things we've talked about in building innovative partnerships with whether Insuretechs, FinTechs, or just any entity outside of our organization, Pooja, what are one or two things that you would say would be takeaways for our audience?
Sure, John. Just adding on to one point about data, I do think that there is merit in assessing the regulatory requirements that are shaping today. And that was one important lesson and a takeaway I would like to leave with, because it is informing a lot of decisions. And what we're seeing is that the cost of data solutions can be significantly optimized if we go deeper into analyzing the regulatory requirements rather than taking broader assumptions. So that was one. And I think second is that the journey ahead for insurance industry, if you take any line of business, I think is certainly about touching lives and about ultimately creating human value. And that's in talking to a reinsurance expert, this perspective of you take anybody globally, we touch their lives. And I think that is that ultimate human value. How do you leverage innovation to bring about that? And as business, as the insurers are trying to enable growth and differentiation and cost takeout while building sustainable solutions, what are those trade-offs and choices that what are those trade-offs that they need to understand? The choices that they have and that they should pick is, I think, where a lot of collaboration can be leveraged. I would leave that thought there.
Yeah, and we've talked obviously as we should about technology, but that human touch is very important. Frank, what are one or two takeaways that you would have for us?
Yeah, John. Well, it's such a dynamic landscape and technology is changing so fast. I think it's important to have optionality, keep your options open, right? Stay away from decisions that are difficult to reverse. Go for decisions that create a rich option set for you. And with regards to Insuretech or others with good idea, everybody is a potential business partner. Back to you, John.
No, appreciate that. Heather, what would you like to close us out with?
I think the conversation's been really interesting, and I think it shows not only the synergies that must exist between Insuretech and insurers, but also how that collaboration can actually drive innovation. And I think that really trying to understand the business problems that are trying to be solved, as opposed to just tech for tech's sake, is really key. I like the point that Frank just made in terms of making sure that whatever decision you're being made isn't final or unreversible. And I think my advice would be, when looking for things like customer engagement platforms, that there's absolutely value in this open approach, one that can offer applications end to end to be driving customer experience, workforce experience. But it's got to be open and actually seamlessly work with the tech investments that you as an insurer have already made. Whether it's your cloud infrastructure, whether it's your cloud telephony, your own data lakes, CRM, et cetera. Because the end outcomes are only going to be as valuable as those integrations that can take place. And it means you're kind of future-proofing the investments you're making then in tech now to drive those automated experiences, not knowing what may be around the corner. So it's just that open platform that's absolutely key. And then I think, finally, I think Insuretech does need to listen and learn from the insurers. That's what's going to drive innovation, if we're actually building solutions with AI and data that are solving actual business problems.
Yes, for sure. Very well said. So here's my only takeaway. I'd like to thank Tech Mahindra for setting up such an awesome panel, giving us an opportunity to share some thoughts. And once again, thanks again. I'll turn it over to our host.
Thank you. Thanks, John. Thanks a lot, everyone. Frank, Heather, Pooja. This is truly one of the most engaging conversations I've had. It's interesting to see, different takes on approaching innovation and challenges being faced currently, and how all of us are looking, at different technologies, AI, data, cloud. I also like how we all have a lot to learn from one another. Thanks a lot. Thank you. And I see there are a couple of questions on the chat as well, but considering we're already at the top of the hour, I think we can take them offline. Overall, I think we've, in this webinar, covered a lot of major topics. We went from macro trends and how tech evolution has been eclipsing the economic changes, and discussing about evolving customer expectations, seeing different takes on navigating the landscape currently and solving the real business problems we have right now. And finally, the impact of AI and large language models. I mean, it truly has taken everyone by storm, right? Thank you. Thanks a lot, everyone, for this discussion, for joining in. And I know for some of us, it's quite late already, so I won't take a lot of time. Have a great day, evening. Thank you.